what is it that makes Bitcoin interesting enough that so many smart people see this as ultrasound money? And what does ultrasound money mean?
The world has a history of money, whether it's backed by gold or not, where government gets themselves excessively into debt and they devalue the money. So the Romans used to clip the edge off the coins so there was less gold in each coin. And eventually people would lose faith in the coins because they would blend them with silver and then blend them with copper. And, the coins were worthless because that was supposed to be worth the value of the denarii in Roman times. But governments can't help themselves. Humans, we're just humans, right? Humans are fundamentally flawed creatures and we always will be. So then we have these gold standards. The US and the UK were on gold standards. World War I, World War II, we all have to leave it because we've got too much in debt again. We've overly financialized yet again because humans love leverage above all things. It's kind of sex and leverage are the two things that drive humans for some reason. Then we adopt a new system, which has been around before, but it keeps getting abandoned, called fiat money. Fiat money is money not backed by anything. It's backed by the promise of the central bank paying it. So that's the dollar bill that we all are familiar with. And every country in the world now adopted fiat currency. But as with everything, if you're really thirsty and I gave you a bottle of water or sold it to you, you'd probably pay me 10 times too much for that bottle of water. If I give you 1 million bottles of water, they're worth precisely zero to you. So scarcity has value. That's art, that's cars, that's almost anything. Humans value scarcity for whatever reason we do. And so if you're printing too much money, you're creating less scarcity. So yes, there's money everywhere, but the money has less value. So once you understand that, you say, well, what does it mean? The dollar hasn't collapsed. It's kind of where it was versus the euro in the last 5 years or whatever it is. And then you say, but my $50,000 salary now can buy me much less shares in Apple, Amazon, Google, Microsoft. In fact, units of the S&P 500, I suddenly can't buy as much. Since 2008, it's a fraction. I can buy like a third of what I could. Same with real estate, same with gold. And then you're like, assets have suddenly got expensive. They haven't. The value of your savings has gone down, or your money. So you can't afford to buy assets. What is an asset? An asset is deferred consumption from the future. I buy a house, I sell it in the future, I get to retire, whatever the things are, right? We don't buy the S&P because we want to hang it up in our wall. We buy it because we want to sell it at a future date to realize money. So that means our future selves are now poorer. That's essentially what this means. That's what currency debasement is. So Bitcoin comes along in 2008, in the middle of the crisis. It's kind of like it was perfectly prepared for this and said, Satoshi goes, hey, look at this. I can create an algorithm that only creates so much of this thing, the Bitcoin, and it can never vary, ever. So therefore, this is scarcity that humans can't fuck around with. Now, humans have this propensity to fuck around with scarcity because they're economically incentivized to do so. Here they can't. So then they become economically incentivized to own this asset because it's scarce and it cannot be changed because it has this consistent supply curve and a limited number. So Bitcoin becomes this great store of value. And it would look like gold because gold's a good store of value. It's worked for thousands of years. But Bitcoin has this other thing to it. It's a network, which gold isn't, and it's technology, which gold isn't. So we have use cases and the benefits of building a network. So suddenly it goes up exponentially in price. Roll on to 2015, and suddenly somebody's looking at the blockchain and they start saying, imagine if these bits on the blockchain, which is where you record the ownership of something, in Bitcoin, it's Bitcoin itself. What happens if we could put a contract in there? Because humans live off contracts. Everything is basically a contract in our legal terms. And that was the rise of Ethereum. It became a platform where you could programmably change the blockchain, not the attributes of the blockchain. You couldn't remove anything off that ledger, but you could change the little holding buckets and say, well, it can look like this, it can look like that, it can adopt to this. And those things were verifiable as well, so they couldn't change. So this created Ethereum, which became the platform. So if you think of Bitcoin as this store of value, this very pristine, beautiful thing, then you think of Ethereum as also a very beautiful thing, but it's a much broader application because it's like programmable money.
Need motivation?
Watch Top 10 with Believe Nation.
Top 10, I got a top 10. Got my motivation high for my top 10. Gotta learn from the wise women and men. All my life, like 9 to 9. For my top 10, top 10, 9 to 9. This one's for my top 10.
Hey, it's Evan Carmichael, and I make these videos because you are probably the most ambitious person in your circle, but you know you're capable of more. And you get that push by surrounding yourself with the best. So today, let's learn from one of the best, Raoul Pal, and my take on his top 10 rules for success. Enjoy. Rule number 2, don't fear change.
What have we seen over the last 9 months in the macro story of crypto? Has there been more of that convergence? Are they now close to one and the same, or what's changed?
So I think they're the same. So if I go to my peer group and the people I really respect from macro hedge fund space, right? So that's the pointy end of macro. Those are the guys. Almost all of them have transitioned across in one way, shape, or form, either entirely or partially.
Really?
So like, yeah, I mean, very
is that like
famous.
the last 9 months? Or how long
has it been? It's been
happening
happening slowly, but it's increasing. You know, it's going exponential as all these trends do. So, you know, people like Alan Howard, who's one of the world's most famous macro investors based out of the UK, he personally is entirely crypto now. You know, Dan Tapiero, you know, good friend of mine, he's entirely crypto now. I'm pretty much entirely crypto. Certainly my investments are. I still look at them whole macro world. But one after the other, they're all seeing the superior returns and a solution for the set of macro problems. So macro guys generally tend to be pretty pragmatic. We've got a set of problems, solutions, what's going to make money, allocate capital accordingly. But everybody's going, well, this is the biggest opportunity we've ever seen, because everybody starts on the Bitcoin journey and ends up having the holy shit moment that everything is about to change. And I'm sure we'll talk about a lot of that later. So I think macro and crypto have merged. What you're seeing now is you're seeing a lot of noise from the latecomers to macro. People who only know either the latecomers from macro or the ones that have been around very long and are anchored to gold and certain kind of mean reverting ideas. What you're seeing is a fear of change. So the noise that you're getting at the periphery, the Peter Schiffs of this world, for example, is not that Peter Schiff doesn't understand that crypto is the future. It's that he doesn't want it to be.
Rule number 3, compare different trades.
When I got started kind of March, I was short equity markets, betting they were going to go down. I'd started buying Bitcoin. I bought gold and I was long bonds, expecting rates to go to zero, which is essentially all played out. So it was an amazing period of time. Then we kind of settled in the trade. I closed out my short positions in equities because they're always dangerous when the central bank's printing unprecedented amounts of money. And I thought, okay, if they're printing unprecedented amounts of money, how do you capture that? You know, what's the trade to be done? And the trade was this debasement of currency and the kind of people wanting to protect their capital. So I was still with gold and Bitcoin. And basically, I just started toying around with the charts of Bitcoin versus ... and looked at anything. And it was like, well, it's actually outperforming everything on Earth. And at the time, it hadn't started fully outperforming for this cycle, the central bank balance sheets. But other than that, it was starting to break down versus gold, equities, NASDAQ, you know, copper. I mean, you name it. And I was like, I called it the supermassive black hole, that I saw that it had a high probability of outperforming literally every asset on Earth, and therefore it was going to suck in all the capital. And so I just closed my gold position, went 100% into Bitcoin at that point. and then eventually broadened out into other digital assets.
What gave you the conviction to fade the like tulip concept versus the like this is going to stick around and be a part of real macro?
So I'd written in 2013 an article about stock to flow. So I kind of thought, well, if Bitcoin is digital gold, then it should have the same attributes. So I kind of figured out on a rough kind of back of a fag packet piece, calculation is, okay, how much gold is above ground? How much gets mined? How much do we know is in discoverable sources below the earth? And then kind of back that out into Bitcoin. And I figured out with gold at the time is about 1,500. Bitcoin should be at 1 million. And that was, I thought, okay. So, and it was at the time, it was at 200 or something stupid. So I'm like, okay, this is the wrong price. So that was the start. I probably wrote the first ever article about kind of macro valuation of Bitcoin. Then obviously Plan B independently and brilliantly put together his stock to flow model, which even if it's not 100% perfect, gives us a conceptualization of how this might work because of this halving and the scarcity of the asset. But it was really discovering Metcalfe's law and how it applied to networks that gave me an understanding of how big this really could be. And once you look at things that are network adoption models, you tend to find they don't mean revert like a commodity that tends to have, not enough supply, which is going on right now. Supply meets it, collapses, right? This can't happen in crypto just by definition, particularly in Bitcoin. And then when you look at it, all of these kind of events, they look like bubbles, but they're all part of an exponential trend. So once you put it on a logarithmic chart, it actually looks pretty normal. And that's how you have to get a head around it. And humans don't think in non-linear terms. It's really hard for us. So, if you take 20 linear steps out of my office here, I get to the other side of the lounge. If I take 20 exponential steps, I go around the world twice or something stupid. So, we can't get our heads around this. But I started looking at those charts, figuring out how network effects apply to this, and then realized the only mean reversion is probably to something like the 3 or 5 year exponential moving average, and that's it. So it's just an exponential curve that keeps going, but flattens out over time as the network effects get more saturated.
Rule number 4, start by understanding money.
What gets worse about this is this affliction, this crypto affliction we all get, right? The rabbit hole, as it's known. You start with understanding money, which most of us don't think about. Then you kind of understand how we're getting screwed by central bank printing and the debt-laden economy and what it means. And then you start saying, oh, okay, but that's Bitcoin. And then what's this Ethereum business? And then you start realizing decentralized finance. And you're like, it's kind of a finance thing, but that's kind of cool because I can get yields now. I can get, instead of getting zero on my bank account for my hard savings, I can now get 6% a year. Wow, that's a difference. It's like going back 25 years in time. And then suddenly NFTs come and community tokens, and suddenly your mind is completely blown that this is not just money. It's the entire exchange, transfer, and storage of value for the internet. Whole business models are about to change massively because of what this technology unlocks. And then once you get your head around that, you're like, oh God, I can't even hold this in my mind any longer. It's so big. And that it's not just buy some Bitcoin, I'm going to make some money over time. It's actually an entirely parallel financial system and business structure for the world. And it's being adopted faster than anything we can ever imagine.
Also, to make sure you're actually taking action after watching this video, I've designed a special free worksheet just for this video. The worksheet will highlight all of the lessons learned in this video, as well as pull out our 3 favorite learnings and quotes that will inspire you to actually do something. The worksheet will also give you space to write down what your key takeaways are and your specific plan of action to make sure you're getting results. If you want the worksheet designed specifically for this video, absolutely for free, there's a link in the description below. Go click on it and start building the momentum in your life and your business. I'll see you there. Rule number 5, figure out what's going on.
How did I get here? And my journey was, I was macro for 30 years. It was 1997 where the world changed. 97 and 98 was the Asian crisis. The Asian crisis was a sovereign debt crisis and a corporate debt crisis that wiped off the value of Asian stock markets by 90%, currencies collapsed 80%. It was a total wipeout of wealth in Asia. And it was driven by debt. The answer to 1997 and 98 was to cut interest rates. Long-term capital management, the giant hedge fund, blew up at that time as well. The answer to that, because it could have taken down the financial system, was to cut rates. That led to, firstly, a massive rally in equities and pouring of money into the internet boom. So that was a VC-led rally plus all the stocks. That obviously ends up morphing into where we are today. Crypto could not have happened without the internet. But what happened over that period is a massive debt bubble in property. So the debt bubble continued. It, in fact, accelerated. Then it blew up the entire world's banking system in 2008. Nobody knew who'd owned what. So when Lehman went under, everyone's like, well, I don't know. How do I get my stuff back? And they're like, well, it's not your stuff. It's been rehypothecated 37 times. So you can fight it out in courts. And oh, by the way, it's held in the Cayman Islands, London, New York, and Hong Kong. Figure it out yourselves. Right? That was the mess we got into. And people got wiped out. Then we cut interest rates to zero and invented quantitative easing, which the Japanese had been kind of trialing beforehand. So now we're pushing money into the banking system and we have rates at zero. And so humans being humans go, well, great, we'll just borrow more money. And they just keep borrowing money. So all of us in macro have been watching this and talking about it for a long time, 20 years, long time. And we knew, business cycles only come along once every 5 to 8 years. And it all comes to a head in a recession. So 2008, you kind of knew was coming because of what had happened in 2000 and what had happened in 97. And the piper was going to get paid. And the central bank figured a way out of it. Then suddenly, this event happens last year. There was going to be a recession, but the accelerant was the pandemic. So it blows up everything. And the world could have blown up again, right? Everybody should have gone insolvent because the world shut down for a year. But the government just said, no, here, take free money and the central bank will just print it. So we now know what it's doing to the value of our savings because these assets are going up. We're actually getting poorer in our future selves. And so the macro guys start thinking, well, how the hell are we going to get out of this cycle? It's either going to blow up spectacularly, but the odds are getting less, or we're just going to get poorer slowly over time. So it's a matter of how fast you figure out what's going on. So once you figure out what's going on, you look at crypto and it solves a lot of this. So when Bitcoin first comes along, it's clear it's developed solely for this job. I mean, it's very clear in the white paper, and it's very clear when they're looking at the banks being bailed out again, that somebody figures out, why don't we try a scarce digital asset and see if that works? And then about a year or two after that, people start figuring out, oh, blockchain. Oh, that kind of is interesting, but other stuff, because we've got now a trusted ownership structure, which the world didn't have. Then Europe blows up in 2012 as well. We almost lost the whole of the European Union and all of the banks. So we kind of know it's a big problem. And then Ethereum comes along with smart contracts. And then the kind of light bulb moment for everybody goes off is like, actually, we can rebuild the entire system from scratch. So as a macro guy, when you know you've got something fundamentally broken and there's only one set of outcomes, which is printing more money, we've got this low growth from this demographics and technology and all of these things that have been changing the world. So we've got low growth, massive debt, makes it harder to service the debt, increases the amount of printing. So therefore, these assets go up. But the real macro opportunity is to invest in the new world.
Rule number 6, embrace the future.
Why do you think crypto is the answer to the recession?
It's not the answer to the recession. It's the answer to the future of the financial system as a start, just as a small start, is the fact that in a debt-laden society, everybody owes everybody money. And when things go wrong, you don't know who owes what to whom. And that's what happened with Lehman Brothers and many of these other things, is we don't know who owed what because there's daisy chains of all of this debt. Blockchain solves that. You know immediately who's the owner of the asset. Also, it gets around a lot of other legacy financial problems. Ownership is one. There's problems within custody, within the deep hearts of the plumbing of the financial system, that if somebody defaults, almost everything blows up. And blockchain solves that, again, because of this ownership issue. It makes transfer instantaneous, so you don't have 2 or 3 day settlement periods. And there was a number of things. But I also understood that that's blockchain itself. But Bitcoin has these 2 attributes. One is this store of value. So it's like gold because it's a scarce asset, like artwork and other things, real estate. But it has this other thing, which is this call option on the future. What could it be? What could it be used for? What could this technology be used for? And that's really the network effect that is Bitcoin. And it's the same for the whole crypto space. So if it really was going to be a store of value and the central banks were printing an unprecedented amount of money, then like equity prices, real estate prices, gold prices, it should go up in value. But it should go up a lot more because it has this call option on a potential future financial system too. So that was really what I saw. And the chart started playing out exactly that way, where Bitcoin started outperforming every other asset on earth, and it became no point to own any other assets. Now, this year has been less that. Bitcoin has kind of kept pace with other assets, but in a weird way, it went up a lot first and then came down a lot. But over time, it's generally outperformed everything.
Rule number 7, look for low risk.
How do you then choose to diversify into other crypto assets? And
I mean,
is it a hedge or what?
I talked a long time about the tokenization of the world, so I kind of got the whole concept. But Bitcoin was the pure play for the economic situation we were in, right? Made the total sense, right? Easiest narrative, first port of call, lowest down the risk curve. So that made sense. But as the rally started broadening out, we know that over time people move further out the risk curve. The next one out the risk curve is Ethereum, and then you can go all the way out to some brand new protocol that nobody knows whether it's going to work or not.
Rule number 8, trust the blockchain.
One group has everything, everybody else has nothing. And the other thing is I needed to make the world safer because we're kind of screwed. Because of this over-financialization, all the debt, that we could lose the system at any point. Nothing had gone away. The printing of money was just a way of wallpapering over the cracks that the earthquake had left behind. So I'm like, okay, what can I do? So the idea I had with a bunch of people was to try and set up the world's safest bank. And I tried to go and do that. It was slightly arrogant or stupid, probably, to try to do because it's not easy. And we got together quite an amazing group of people. Still, we tried in Singapore, we tried in Switzerland, we tried in the US, it was just hard to do. The system is not there for you to try and change. And so in that process, a friend of mine, one of my clients, tapped me on the shoulder and said, you should take a look at Bitcoin. This was 2012. And I'd been aware of Bitcoin. And I took a good look at it. And he explained to me both the store of value proposition and the blockchain element, that anything could be trusted on the blockchain. I looked at this and I'm like, oh my God, this is the future that we need. Because the problem we've got is when a firm like Lehman Brothers goes bust, nobody knows who owns what. And somebody's going to get screwed in that equation. Just one of the very issues at the center of the system. Nobody knows who owns anything. So I started looking at that and I started writing articles and invested in it first time in 2013. 2014, I started Real Vision because I wanted to democratize the very best financial information. Nobody gets access for an hour to the world's most famous hedge fund managers unless you invested $100 million. Real Vision changed that equation entirely and said, listen, forget all this sound bites on CNBC of 3 minutes. It's worthless. We're going to give you an hour of the world's most successful investors, the best independent analysts and strategists, and then you have a level playing field. And that was a game changer. I mean, since Real Vision started in 2014, there's probably been 200 podcasts that's copied that model. So this is this movement. There's 2 things. There's the democratization of information, and then there's crypto. So crypto, as it starts building out as an ecosystem, you start to realize that, okay, this is now the fastest adoption of any technology in all recorded human history.
Rule number 9, understand the adoption.
We've just discovered the Americas from scratch. Why would you not buy that? Because it actually answers all of the problems. It's got the scarcity, it's got the ownership, the transference. It's a new system. It doesn't have the fragilities of the old system. And then the macro story gets better because it's like, if you remember, go back 9 months, go back maybe 18 months, I was like, we need a yield curve. 4 months later, DeFi explodes. And it's kind of there's different yield curves everywhere and different risk curves and God knows what. And then ETH and staking comes along and we've now got a risk-free yield. I mean, we've got everything we need. So this becomes a macro bet now. So how do you analyze a macro bet? Because for me, I can't understand all of the protocols, or, look at every single token, think about everything. So you need a framework, a macro framework. We need to simplify it. And so I spent a lot of time around kind of November last year, October last year, looking at the pushback people would give you in social media when you talked about Ethereum. And the Bitcoin guys would hate you, right?
Right. Mm-hmm. Yeah. So I remember when you came on in November, and one of the big, I could tell one of the big areas of interest for you at the time, Raoul, was like tribalism. Because I think you were seeing all of the tribalism in crypto and being like, why can't everyone just get along?
Right. Mm-hmm. But that tribalism forced me to understand when I get these kind of pushbacks, right? So we talked about it before, the kind of gold crowd. Why do they push back? I don't get pissed off with them for pushing back. I try and understand why. What is the motivator? And then once you understand what it is, it's a much easier thing to deal with and also to reason with people. And this Bitcoin pushback about Ethereum, I was like, what is going on here? And, we know all the stories of why, but they all had reasons why Ethereum was not the same as Bitcoin. And it's obviously clearly not as an asset, right? It's a very different thing. But why would you not look at it the same way? All equities you kind of look at the same way, and all fixed income you do. And so why would you not? So then I just dusted off Metcalfe's law and realized that it fitted perfectly. It was absolutely perfect. And in fact, it matched exactly where Bitcoin was when it had the same number of wallet addresses. And it's like, oh my God, it's the same price as well. And then I realized the whole damn space was this. So then it was just a matter of adoption. I didn't have to be the guy in the weeds understanding everything. I just need to understand how fast the adoption was. And when we're talking about adoption, there's two ways we need to think about it. One is investors in it. So we can see Doge, for example, classic example of a one-side network effect. So price goes up because a bunch of investors, but if they go, it would all disappear. But Ethereum clearly had more developers working on it than any other ecosystem, and that was growing, the rate of change of that, and the number of applications. So now you've got this kind of perfect storm of network effects. And that helps me understand stuff like Doge as well. I mean, people are like, this is a scam, blah, blah, blah. I'm like, no, it's not. If you've got $40 billion of value in it from investors alone, then all somebody needs to do is figure out the other side. And you've got a massive network. And the first person to do that was actually Mark Cuban. Mark said, fine, you can use Doge at Dallas Mavs. And then Elon had seen it as well. And clearly he's working on something to do with it, whether it's streaming car payments or whatever it's going to be. It's very clear that it's going to be used. And that's fine because you become less cynical about what these things are and you can judge everything by, is it a real network effect or not? And that's made the space much more investable, much more macro, much more understandable, and much less tribal.
And rule number 10, the last one before some very special bonus clips, is study the chart.
In October, I started seeing the chart of Ethereum versus Bitcoin and looked like it was going to start outperforming, just a chart pattern and a hunch. And then I started digging into, okay, how do you value Bitcoin and Ethereum? So we've had the stock to flow model, but really what it was to me was also a network. And you use something called Metcalfe's law to value a network, which is basically a network has value proportionate to the number of people on the network and the number of interconnections they have with each other. Mm-hmm. So I could see that in Bitcoin, and you could pretty much prove it out by putting like number of active wallet addresses and the price of Bitcoin on a chart, and you basically get a very high correlated answer. And I could see people attacking anybody who talked about Ethereum or other tokens online. So I'm like, I need to find out how you price Ethereum, because I have a feeling it's exactly the same as Bitcoin. And what was interesting is I used the same mechanism and it's priced exactly the same way. But what was more surprising is the adoption of Ethereum was much faster than that of Bitcoin at the same stage. So I'm like, wow. And then you start realizing the number of things being built on it, the applications, the number of developers involved, and the speed of the increase of the number of users. So there's a lot of interconnections plus a lot of users. That was going to become very valuable. So then add a chart onto that again. Chart of Ethereum looked like it was going to break out, and that gave me everything I needed.
Now I've got a special bonus clip that I think you're going to enjoy. But before that, it's time for the good deed of the day. This is something new. I believe that you're built to serve, and it feels so good to do something nice for somebody else. So good deed of the day, put down in the comments one thing that you need help with, that you're working on, that you'd love some support or guidance on. And then 2, go comment on somebody else's comment and give them some love, give them some support, give them some encouragement, maybe give them some connections, try to help them solve that problem. Even if it's saying, I believe in you. That one little bit of encouragement can be the difference between somebody quitting and continuing on. So the good deed of the day, in the comments below, write down one thing that you need help on, that you're struggling with, that you're working on. And then part 2 is go give love to somebody else in the comments too, and let them know that you believe in them as well.
People go out the risk curve, and that's normal, right? It happens in all financial markets. So I figured that was going to happen because that's how people do things. And at the same time, I'd started looking at the chart of Ethereum and thought, this is a really great chart. So I started writing about it, and particularly the ETH Bitcoin cross. So I started writing about it a bit. And hilarious. I mean, I write about it in Global Macro Investor, and they're all kind of institutional guys, hedge fund guys. They're all like, oh, that's fascinating. I put it on Twitter. I was like, how dare you? You're cheating on us. I'm like, what? And then I started getting called a coiner and a spammer. And I'm like, wow, if somebody tells me not to do something, I'm absolutely going to go and do it. So I started doing the homework on it. And the argument was that John Pfeffer's article about why all coins go to zero except Bitcoin, I just thought, well, this is bullshit. So I went and disproved it and wrote an article about it. And, you know, he built this model around some sort of quantity theory of money model. And it's like, it's never worked in the real world. So why is it going to work in crypto? And why suddenly do you say in that whole article, which was a great piece, to be honest, but one of the things was, well, obviously Bitcoin has network effects, but nothing else does. And therefore these utility tokens go to zero. I'm like, let me check on that. So I just plotted them out. In fact, to be true, Remy plotted them out because he's better at Excel spreadsheets than I am. And he plotted them out. And guess what? You put on the number of wallets and the price, and lo and behold, there's a nice regression. They're basically to do with network effects. And then I looked at Bitcoin and ETH, and they looked identical, except ETH was earlier. Then I started putting the price of ETH at 5 million wallets and Bitcoin at 5 million wallets. It was exactly the same price, and the price structure was the same. So then I started realizing, well, maybe stock to flow is actually just an extension of Metcalfe's law, and all of this is network effects. So I started then trying to understand more about Metcalfe's law, how it affected the mobile phone industry, the internet, and then stuff like Amazon, Facebook, Google, and all of that. And so that was the huge breakthrough for me, was figuring out all of this, and that ETH was actually gaining faster adoption than Bitcoin. And we know it by the number of developers working on it, the number of applications working on it, and the number of wallet addresses, the rate of increase. So it's growing at about twice the speed of Bitcoin right now. So ETH's growing at about 100% a year, and Bitcoin's growing about 50% a year. The entire digital asset space growing about 113% a year, which is twice the speed that the internet grew at. So this is the fastest adoption of any technology in all recorded history. And ETH is the front runner right now. Now, it doesn't mean it always will be, but right now it's clearly winning network effects. And therefore, I think the network is undervalued.
If you want 10 more amazing rules from Michael Saylor, check out the video right there next to me. I think you'll love it. continue to believe, and I'll see you there.
And the nature of money has been bifurcated, and now the medium of exchange portion of money is sitting in fiat currencies, and the store of value element of money